Okay, good day, traders. Trust we all are doing good. I'm Currency Geek, and welcome to my day 8 analysis of the 100 Days of Tech Analysis Challenge. So, GBP caught my interest, and based on the last projection of price, which I did, I expected price to actually move to the downside, and it did play out as expected. So what I would look to major in now is to look for a long position on GBP JPY, because it actually moved down below the neckline or the target. So I'll be looking for long positions on GBP JPY. Now to the weekly time frame, I would take all of this off and mark out the projection for price to move to the upside. Now, sorry. So the impulsive move, or a corrective move to be precise, happened to the neckline of the W pattern. And I've been talking about M's and W pattern for a while. I will talk about them again. So I said a W pattern will form and price will come back to do a retest to the neckline before projecting higher. And I said the same about an M pattern, where price will come back to do a retest to the neckline and move lower. Now we have this formation already on the GBP JPY pair, and at this point, yeah, this the move we look to catch, the impulsive move to the upside. Now I'll start by marking out the target for my long position. So this is the area of structure, the previous area of structure here. So this should be my target for GBP JPY. Now quickly switching to a line chart, I'll just pick up my ray tool and place it on my anticipated targets, and also mark out the neckline of the W formation. Then switch it back to a candlestick chart. Now I can actually tag this as neckline, and tag this as and tag this as um target. Now with this known, I'll be looking to go long on GBP JPY. Now I'll be looking to go long on GBP JPY. So let's go down to the daily time frame. Now to the daily time frame, I can see price has been moving impulsively to the upside, correctively to the downside, impulsively to the upside, and correctively to the downside with an expected impulsive move. Now, the impulse and correction pattern is actually a market structure pattern, to be precise, whereby a series of highs and low are being created. Whatever market condition you find it in. So, with that being said, we can see that previously, yeah, price when price moved correctively to the downside, it created a counter trend, a bearish trend to the downside. It created a counter trend whereby price did break out and did a retest here and projected to the upside. So at every correction, it will be a counter trend in any market or on any instrument you find yourself breaking down. Now, this was the counter trend move. Now, with known that the counter trend moves have already happened, I'll be looking to go long, but not today. Today is a Friday, and I don't really trade on Fridays. So what I expect actually is a possible morning star pattern formation here. So I expect a possible morning star pattern formation before I look to go long. But still, if the morning star pattern formation doesn't form, I would still look for other confluences to go long. Now, knowing that price has been moving impulsively, and correctively on the daily time frame, this is another added confluence to the W pattern to go long. Now, this is two confluence. So I'll be looking to go down to the 4-hour time frame. And on the 4-hour time frame, there is a channel on the 4-hour time frame, a channel in which price has or price is moving in, to be precise. Now, so the channel So we can see price has actually been moving in a channel. So we know the rules when price actually moves in a channel. We expect it to reach the value high of the channel. So um, we expect something like this to reach the value high of the channel. Yeah. But we know channels can break and they can actually reject. But I still would keep my target at that weekly level, but look to catch price movement to the upside. Now, on the 4 hour time frame, let me zoom in real quick. If we all look closely, we can see this is a CTL, a corrective trend, whereby a counter trend line can actually fit in right here. Yes, whereby a counter trend line can fit in. So, what I'll be looking to do is to go long on this pair. If this CTL, this counter trend line, breaks and possibly does a retest back to the downside and projects price higher, so I'll only be looking to buy GBP JPY if this area of structure, this CTL breaks. Now, going to the last time frame where I do look out for price action. Um, Structure already broke on the 1 hour time frame. If you look closely, you see price has been creating series of lower highs and lower lows, lower highs and lower lows to the downside. And this was the last lower high created, this area here. Let me zoom in. You can see this was the last lower high created. If I pick my trend line and drag it into price, we can see that price actually broke it and did a retest back to it, then projected higher. Now, with this known, structure has broken. Structure break or break in MS. MS stands for market structure. So breaking MS, breaking market structure. So I just expect price to continue moving to the upside, creating series of higher highs and higher lows in this instance. So knowing that market structure has break on the 1 hour time frame is still not more than enough confluence for me. I still expect this corrective trend line to break because structure can actually break and still not break this corrective trend line. So I expect this corrective trend line to break or counter trend line to break. Then a retest happens or occurs, a major retest. Then that is when I would look to long GBP JPY. So I hope you guys actually learned something from this analysis. I look to go long on GBP JPY. So if you do have sentiments about this pair, please drop it in the comment box and do leave a like and follow. Thank you.